It's no surprise that prices started going up a little bit faster than they should have, especially when we look at the peak of 2022. But the question is, how quickly did they actually go up, and what would they look like if we didn't get that quick acceleration through the last couple of years? In this video, we're going to break down where prices went, where they should be, and where they could go in the future. I'm Ouzas. I'm a realtor in the Greater Toronto area. I'd love to hear your thoughts on what you think pricing should be at today. And if you ever want to book in a call with me, click on that first link in the description down below. So because we don't have the data for the year of 2023 just yet, we took the January through September numbers and then sprinkled in October as well. Let's take a look at what that looks like of where things were and where things should be right now. I think the answer might even surprise you. So let's start here with the average monthly MLS selling price. And this dates back to October of 2018. We're down about 16% of where things were at the peak and down about 3% from October of 2021. But if we were to look at where things were in October of 2018 compared to now, that's a pretty good improvement on price growth. What exactly do those numbers look like? Went back in the data all the way back to 2003 and added in 5-year increments moving forward. The average sale price from January through September is shown here. We added the historical 6.87%. That's a 40-year average annual increase for the Greater Toronto area. The actual average price for September 2023 is seen here, and then calculate the difference on how far away from the trend line this number actually is. So if you purchased a property in 2003 and added the historic 6.87%, your value today would be somewhere around $1.1 million. The actual average in September and October is very close to the same, is about $1,130,000. So you're looking at about a $30,000 difference, which is about 3% off where we should be. If that number surprises you, drop a comment down below. Now, if we take a look at 2008, and we all remember what happened in 2008 down in the US, the average sale price from January through September was just over $380,000. At today's historic value, that would be somewhere around $1,030,000. And then the actual average right now at $1,130,000, you're talking about give or take $95,000 to $100,000 difference, which is an increase about 8.5%. We are a little bit ahead if you purchased in 2008 of where the historical 6.87% average would be if you purchased in 2008. The biggest gap here is 2013. So with an average $520,000 selling price, then adding on the historic value of 6.87% per year, you're looking at about $1,010,000. So there's about $120,000 difference from that number of where things should be here in 2023. That's about 11% above the trend line of where things should be. If you purchased in 2018, and this is where I find it gets really interesting, is that 15 years between 2003 and 2018, over time, even with the correction with the fair market housing plan in 2017 that was implemented, $707,000 average purchase price. Today's average value about 1.1 million, give or take, about 3% above where things should be. Not a huge jump here, and right in line with that 2003 number, give or take, you're looking at about 3% above the trend line. On average, in the Greater Toronto area, prices have increased at 6.87% a year for the last 40 years. I thought it'd be fun. Let's play with a 10-year outlook, and I just added 3 different lines of increases. So if we take a conservative route of 3% a year, the October 2023 average price about 1.13 million. October 2028, if we add that 3% per year compounded, we're looking at just over 1.3 million. 10 years out for October 2033, you're looking at about 1,520,000, which is the difference of about $390,000 from where things are at today on a 3% increase. From that 5% year increase, October 2028, you're looking at about $1,445,000. October 2033, $1,845,000. That's about a $700,000 increase. And then if we factor in the 6.87% per year appreciation, you're looking at about $1,580,000 in 2028. 2028 and about 2.2 million in 2033. This average about just under 7% a year brings us pretty close to in line of that 7-10 rule, where if you invest at 7% return for 10 years, your money doubles. If you invest at a 10% return over 7 years, your money doubles. So that's kind of where this number comes into play, just up about 1,070,000, give or take. Looking at these numbers, even on the conservative side, that is a pretty big increase in pricing. And while we don't know what's going to happen from now until then, I thought it'd be fun to try the exercise out and see where that pricing brings us into the future. I think it's important to keep in mind that when buying real estate, it's great to have a long-term outlook. In general, you're buying a place to live, to grow in, and to enjoy your time in that property. Day trading real estate is really difficult to do, but having that long-term outlook is super important. Last piece I'll say is that this is the average price as a whole and factors in all the property types. It doesn't necessarily mean that it costs over $1 million to get into the Toronto real estate market. It'd be cool to check out this video in 10 years to see how far off that price point we actually are. I'm Michael Ouzas. Thanks for watching.